G'day. Happy Wednesday. Hump day. Hope everyone is doing okay. That's the Loader and NASDAQ. After that big pump up, we've been consolidating in that range. And yesterday we saw a slow grind late in power hour. And that power punched through to the highs, and then we saw some rejection. Usually I'd leave the power hour, but in this instance, I just played it a bit. Lost about 80 bucks. Yesterday was a no trade day for me, but I opened, because I wasn't home. I opened the account on my phone. I don't like doing. Kind of broke my rule there. But a setup seemed really interesting. Right at that little spot here. And I took it. Just a little scalp. At very tight risk. And I closed the position because we saw some support coming through in this area at the bottom of the range, and we couldn't get strong volume pushing it down. So I kind of closed the trade, yielding me about 200 bucks. Then later, when I came home, I took a trade up here, thought that it's going to be a short, but maybe I was tired later in the day. This is not my usual trading window. So I wanted to just get out of the position, but then I added to it by mistake. So as soon as I added, I knew that, okay, I'm not focused, so I closed it. That trade played out beautifully, but I just wanted to save my emotional capital. And then I took a short right here, got out immediately at a small risk, about break even, and then I short up here that I thought that, okay, now that market's going to be wicking, and we're seeing that behavior where you get a little pull up and then you'll sell off. So, but that stopped me out. Tight risk. I was just for 2 contracts. Yesterday was about very small green day. Still green, happy with that, but that stinged. And I didn't want to put the rep in where trade doesn't go your way, and I just left the account. I didn't push it. And that worked out beautifully because market kept ranging up and I wasn't seeing the market clearly. But in this instance, I was seeing the market clearly. Just putting another extra contracts in wasn't part of the plan, so I wanted to follow the plan. So I got out. Take that off. Come and draw our overnight range. And yesterday kind of was flat throughout the day, which is not a bad thing to do, seeing that there wasn't a lot of volume. ATR shrunk, was compressed, and there was a lot of choppy moves going up and down, and market was kind of sideways. Wasn't anything like the day before Monday where you could see a strong trend up and then we sell off. And so there's a lot of opportunity if you just follow the trend. So let's see how we do today. Not much to go before I pass this combine. I'm trying to do it slowly, reinforcing the reps and reinforcing the discipline more than anything. So I've changed my risk settings from 500 loss per day to about 400. I want to do it about 200, but I'm just giving it some wiggle room. And we'll size down today to 3 contracts or 5, depending how the setup presents itself. So don't want to sabotage my consistency, and also don't want to sabotage my position sizing, because I've been doing okay, following the rules, and I should stick to the plan. It took me a while to build those rules on this account. Once I have them, I've got a checklist that I tick off every single session, journal how I was feeling and everything. So I've got a lot of data that I'm using to see how we can sharpen the system even more. But key lessons: trade less, manage position sizing, manage trade positions. Trade management should be key. And After a couple of losses, just close the day. After, if it's a healthy green day, just close the day and live to trade another day and come back at it tomorrow. Small, consistent wins and even smaller, consistent losses or loss days is gonna make me thrive on this account. So that's the little takeaway. All right. Looks like the range just shrunk and we just went sideways in London session. Nothing too shabby. So let's see if New York decides a direction. We could see a strong bull candle pushing it up to 23640, and then we could see some nice uptrend, or we could see a push down and kind of come and revisit 23440 or 420, or at least the top of the yesterday's opening range, which is 23,500s. Let's see. Market's opening in about 6 minutes. That's a strong setup here. It's right below the overnight range, so tells me that it could be bearish, but let's look at the larger time frames. Larger time frames tell a different story altogether. We've been seeing a nice higher high, higher low. Now that's the higher high, and see if we can get a even higher low. The break of structure. But looking at right now, we're stuck in a little wedge. We'll need strong volume to get out of the wedge. This is exactly how this was, or this was, or you could argue that this move right here. Yes, it's a little bit extended, but this was extended as well. We don't know if the market's going to come down like it did on 19th of August, or it's going to break above like it did on 12th of August. So that's the little wedge setup. Someone who can't see it, this is what I'm looking at. I'll delete these lines because I can just tell. As soon as we get out of this on a larger time frame, we will or should see some strong volume deciding the move for the day. We could get a breaker wedge above and strong pushes up higher, and buyers will get interested. Or once we break this wedge, which we are flirting with it right now, and if we don't find support here at this trend line, then we might come back, retest it, and just keep pooching down. And it could be something like this candle here, where it breaks the wedge, goes above, takes everyone out, or grabs the liquidity, whatever you want to call it, and then comes back into the wedge again, and then you get consolidation, or just still want to decide where it wants to go. Or we will just see a clean break. We don't know yet. Nobody does. Just going to be playing off what we see for the day. These levels here are significant, but not as much going in the session, unless we see a huge market pullback, getting it completely lower. Trading at all-time highs this whole week was very tricky. We didn't know if it was going to go up or down. There was a lot of choppy moves, especially here as well. And these spots, there weren't any levels to play off of. But now that we have those levels, you can kind of gauge, because these levels are going to be acting as key resistances or support or magnets. And we'll see a lot of volume come in. Once you break those levels or you reject them, and that's the volume that we're looking for. And that would give us better prices to get our entries and stuff. So I'm going to delete these lines. Clean up my charts. Usually don't like my charts being like this, but it's just been very important. I might just shift to my trading view chart and do all my charting in there and leave this chart completely naked. Or over time, I'll just move to minis and they look completely sharp. That's the goal, moving to the minis, or do charting on the minis and executing on the micros and vice versa. That's a little trick here. The reason I don't go to minis is because the account size is small. Once I build a good cushion up, that's when I can just go with 1 or 2 minis. And scaling out or scaling in with minis is kind of tricky because the account size is smaller. You don't want to be over leveraged. So at the moment, the micros is working good for me. That's what we're doing. That's strategies based off of 1 minute before market opens. Also look at the daily. Daily looks like we're just consolidating in that region. That's why we saw that shrunken ATR. Let's see what happens. Not a lot of significant news today. Nothing impactful. All right. That's the market open. I've been taking trades in market open as well because we see so much volume right at the open and then it dries off. So if you see your setup right at the open, you'd be taking it. At the moment I see market below the overnight range, and then you saw that big kill candle. There's a sign that, okay, market might be coming down. At least revisiting these levels here. So big move pretty quickly. 30 points. I'll come in and draw the opening range. That's where we're at the moment. Like a classic short setup, but I don't want to jump the gun. Could do with a small position, just a proof of concept that this could act as a big resistance level when we might be targeting these levels right here, 520s and stuff. But it's at the open and anything can happen. Not a lot of volume though, still. Market looks weak. All right. So we go and tap the opening range, the high of the opening range. Let's see where this candle settles. That's the retest. Like nice 10-point trades here. Okay. Tapping the opening range, finding a lot of resistance there. Extending the opening range. Grabbing those stop losses. My bet is we might just come and reject the low of the overnight range. That would have been a nice trade. I missed it. Markets moved pretty quickly. Sideways, have to be quick. What do I see at the moment? We're below the overnight range. What's the logic? We're below the support region. Resistance, that turned resistance. Broke below. Could be just grabbing these orders off of this level when kind of got rejected. We still need to revisit 23.5 on 2s and 5 on 0. So could be a good short setup. Seeing London was all consolidating. Pre-market, we saw a little push up. We couldn't get it higher, so tells me this is heavy. Are we ranging right at the lows, which is a good thing. That means buyers can't step up. We might see a dwindle down. That's the retest of the opening range high. See if we can extend the range even more. My bet was to get it in order at 23.570. right? Opening up the opening range. I'd come and tap 23570. If you do, that would be a good short entry. I want to see where this candle closes. Right, that closed below.
Order filled.
I'm gonna try a short, close below. So let's see if we can dwindle down. Stops break even. Don't want to get whipsawed. Yeah. Nice big move to the downside. Might just stop me out because it's just choppy. Want to see strong volume down this candle. Wicking, finding support there. Need a strong push down. Take out all these wicks. If you can go and at least test the low of the opening range, that'd be cool. Right, testing those wicks. Damn. See if we can test the low here. I can probably target roughly here. Damn. That big wick is not good. A strong volume push down is extended the opening range in the first 15 minutes. Right. I trail my stop tight now. If you drop more, I don't like that wick. Testing the, damn. Trail my stop tight. Super tight here.
Order filled.
It's a beautiful trade. Damn, could keep going lower. That's could find a lot of support in this region as well. And then dwindle back up. Damn, it keeps going. Maybe I got out early. I should have trailed the stops, but seeing that it was wicking before, not a bad idea to secure that green. Off of 3 contracts. That wasn't too shabby. That puts me. Oh, would you look at that? That made me pass the combine. Slow and steady. 1 trade. Happy days. Done it about 15 minutes of the day. Didn't take the orb setup. This would have been a nice orb setup when it broke the range in this candle here, but we got a little bit early. Didn't see a lot of drawdown. Could still keep going lower, but I secured that profit off of 3 contracts, followed the plan. My exit was just to the top of the range. This was a beautiful trade, and it could reverse. Let's see what our exit was. Exit was 501. That's exactly where market's right now. Even if I trailed my stop there, would have just hit my stop there. So I think it was a good exit, seeing that there was a lot of wicks there and a low volume day overall. So happy with that. Let's see and draw the setup. I entered at 551.75. So delete that. Execution is key. Decisiveness in this kind of markets is key. Didn't see much drawdown on that one, so it's crucial. Confidence building. Got out at 23,501. All right. Yes, it went a couple of points below. About how many points did it go below? About 7 points, sure. But now we're seeing a big pullback. So even if I had trailed my stop, it would have hit it. And my exit was based off of, okay, we're going to at least go and test the top of the opening range from yesterday, the swing high of the opening range. And a lot of probability was to come and test these lows here as well. But I went off of here. My order was right at these highs, taking those wicks out. And that exit was great. I did move my limits later once the trade started working out. Initially, my levels were right a little bit, like few points or 7 points above the yesterday's swing high for the opening range. But then I saw some strong volume kick in, and I just made sure I trailed it to at least here. And I zoomed out to get more clear direction. If I had I waited for that orb setup here, I would have gotten stopped out, or just market being very close to my stop right here, because orb setup is opening range breakout. So I've just been seeing that even that would have worked right now, but still I would have been, let's say, just 15 points in the money, and my stop would have been 17 points, and I would have targeted at least these little lows here, so 30 points or 40 points. But we're done with the day. I've been seeing market move quite aggressively in the first 15 minutes, and then it kind of slows down unless it's a big clear trend day. And now it looks like we're aggressively moving down. So even like scaling out and leaving some runners in, or even the people, or if I would have taken the orb setup, would have worked out beautifully. From here to here, that would be like 30, 40 points. But it's not dropping aggressively at the moment. It can easily come in. Let's say if I want to target, I would have targeted the 50% of this level here. So let's say, let's draw a line in the sand. could have seen this move right here. At least that would be the profit target. And how many points is this? I got a really good entry. Would have been about 50 points. And how much did we get out of it? 50 points anyway. So this trade's still in play, but we're out. Our risk was maybe 18, 90 or 20 points here. Because had it come and tested the 50% of this range, I don't want to be a part of it. Or oh, not a bad trade. So in dollar amounts, I would have lost. Oops. About 147 bucks, 150 bucks to make about $300. Right, come back and retest here. That's a great entry for the orb setup. Opening, we just broke the range and we're coming in. We just tested that range to the T here. That would have been a nicer entry. But we saw, reason for getting in the trade here is we tried to come and the market tried and, you know, tried to break or open the range above here. But I got heavy rejection right at the resistance level and it was below the overnight range. That gave me more confluence and conviction to take a short, the tight risk, because market can aggressively come up and take out all those wicks and kind of get stuck in this consolidation region. But if you see that consolidation region, that strong resistance level, all gave me confluence. I'm sure if you come and draw the VWAP, we reject a rife off of VWAP as well. And as soon as we came below the VWAP, that's an extra added confluence. So this would have been a nicer entry too. I think my entry was here, so even better. Also, yesterday we tried to break this. We got rejected. We tested it again and aggressively kept pushing up. London session wasn't bullish. It couldn't break above that resistance level. It came back, it tested this level, found some strong support, still in that level. But these red candles pre-market, about 8 o'clock, 8:30, came and tested that range again like yesterday. And if it was really a strong support, it would have just come and took support from here and just like so could have just rallied higher. A couple of things tells me that, okay, we found support off of here once, twice. Why are we coming back and retesting it? That means there's not a lot of buying interest right in this region, and we saw some strong selling pressure. Okay, that's confluence number one. Second, we came in here, we tested it, we bounced off. That bounce is not very significant, right? Nothing like this, nothing like nothing aggressive like yesterday. And we closed below the 50% of this support level turning into resistance. So I just had a feeling it'll be a short setup. And had I waited for that orb breakout and not getting out quickly or securing my, let's say, 10 points here, I would have gotten stopped out right now completely, because we literally coming back and testing the VWAP again, and my stop would have been above the VWAP. That's the stop out. Price quickly reversed. So me getting out roughly in that region, leaving some, let's say, 10 points on the table. That's all right. Nothing too shabby. I'm done with the day, done with this combine. But lucky, but you follow a system that looks after itself. So that was the trade review. That was the trade right at the open. Size down to 3 contracts. Not even 30 minutes, and I'm done with the day. So thank you all for watching. If I was still in this play, I would just short it here or wait for where this candle closes. But seeing that we're still in that opening range, I would have just waited completely. So trailing stops break even is very important. Protecting capital in this market. Waiting for your next setup is even more important. Taking those little base hits is very important. Today was a 50-pointer, but I would have still be very happy with the 30 pointers, right? If it was like start of the account and it was like 5 contracts, which I usually do on this account, 5 times 2 times 50, this trade would have yielded about $500 in one trade, right? But even 3 contracts made all the difference. And let's come in and check how we did. Started the combine Thursday again because I chose to stay off, and last combine my rules weren't in place, so I just wasn't seeing things right, and I ended up blowing it. So I set my risk settings to maximum 10 trades per day, and then just putting the reps in for doing less, exposing myself to the market like the least amount of times. 1 trade, 2 trades, that's it. If 2 trades are wrong, go back, journal and stuff. So I hope to carry this progress over to the funded account. And thanks everyone for watching. Looks like we just got a bounce off of the opening range. This could be a nice long setup, so I'm just gonna do this since I'm not trading. Let's try and see if we can get a long setup here. Get a stop right below the opening range and target about 50 points and see if we can come and test this. So about 40 points here. All right, we'll see how it did tomorrow. Maybe it was wrong, maybe it was right. Guess we'll never know. But if I was still on the day trading, I would have found this big bull candle which engulfed everything, all the sell movement here. And on a 15-minute, you'll see a wick, right? That gives me confidence to go long. And I was risking about, let's say, 16, 17 points. Even if for my first trade, make about 40 points, that's 1:2.6 risk to reward. Or let's say 1:2 right here. That's a range play. Or you could say that I would be risking 16 points out of the 50 points I made. So that's that. Hope to see everyone tomorrow. Bye.